Here's a detailed summary of ARM's 2025 Q4 earnings call transcript, presented for clear and concise delivery. Introduction. We'll begin by summarizing ARM's fourth quarter and fiscal year results for the period ending March 31, 2025. Today's call features ARM's Chief Executive Officer, Rene Haas, and Chief Financial Officer, Jason Child. Key financial highlights for Q4 fiscal year 2025. ARM achieved a record-breaking quarter, marking the culmination of a strong fiscal year driven by robust demand for power-efficient AI compute solutions. Total revenue reached $1.24 billion at the upper end of their guidance. Royalty revenue saw significant growth, up 18% year-on-year to a record $607 million, surpassing expectations. This strength was largely attributed to flagship smartphone launches utilizing ARM9 and Compute Subsystems (CSS). Licensing revenue hit an all-time high of $634 million, an increase of over 50% year-on-year. This surge was fueled by strong demand for ARM9 and AI-related solutions, along with a significant multi-year AI partnership deal with the Malaysian government. Annualized contract value (ACV) increased 15% year-on-year, at the high end of their recent run rate, and above their long-term expectation of mid to high single-digit growth. Non-GAAP operating profit achieved a record $655 million. Non-GAAP EPS reported at 55 cents, at the high end of their guidance range. Full fiscal year 2025 performance. Total revenue surpassed $4 billion. Royalty revenue exceeded $2 billion for the first time. CEO's key statements. Rene Haas highlighted the record-breaking close to a strong year for ARM, emphasizing the company's position at the forefront of the AI revolution. AI and cloud dominance. ARM is becoming the first choice for AI cloud deployments, with expectations that up to 50% of new server chips at hyperscalers will be ARM-based this year. He cited specific examples like NVIDIA's Grace Blackwell, Google's Axion, and Microsoft Cobalt 100 as evidence of this trend, noting significant price-performance advantages for ARM custom silicon growth. Custom silicon solutions, incorporating ARM CPU, GPU, and NPU technologies, are driving both license and royalty growth, particularly with hyperscalers and in the automotive sector. Smartphone strength. Smartphone royalties jumped 30% year-on-year, significantly outpacing unit shipment growth, demonstrating the rising value per device. For ARM automotive momentum, collaborations on ARM-based Drive AGX platforms, and the signing of the first automotive CSS license with a global EV leader underscore the growing importance of ARM in next-generation vehicles. Software ecosystem. ARM supports a community of over 22 million developers, with their core AI software layer, Kleidi AI, surpassing 8 billion cumulative installs. Strategic vision. The overarching strategy is to ensure ARM is everywhere, and that you can't run AI without ARM. CFO's key statements. Jason Child provided detailed financial insights and addressed key uncertainties. Royalty growth drivers. Royalty growth was broad-based across data center, automotive, smartphones, and IoT, validating their diversification strategy. The increasing adoption of ARM9 CPUs and compute subsystems was a significant factor. Licensing strength and ACV. The strength in licensing was driven by ARM9 demand and AI broadly. He reiterated that ACV is a better indicator of underlying licensing growth and is currently running at a strong 15%. R&D investment. ARM is accelerating investments in R&D to support future growth and develop next-generation technologies. Tariff and macro uncertainty. While recognizing the uncertainty, ARM expects a limited direct impact from tariffs on royalty and licensing revenues. The indirect impact on end demand is being monitored. Historically, licensing has shown minimal impact during slowdowns due to long chip development cycles. Guidance philosophy. Due to increased market uncertainty and less visibility from partners, ARM is not issuing full-year guidance for fiscal year 2026. They believe a range would be too wide to be meaningful at this time. However, they remain confident in healthy growth in the coming years. Q1 fiscal year 2026 guidance. Revenue is expected to be between $1.0 billion and $1.1 billion, representing 12% year-on-year growth at the midpoint. Royalty growth is projected to be strong at 25% to 30%. Non-GAAP operating expenses are estimated around $625 million, with non-GAAP EPS in the range of 30 cents to 38 cents. Future forecasts and management outlook. Q1 fiscal year 2026. Revenue guidance of $1.0 billion to $1.1 billion, with strong royalty growth of 25 to 30%. Full year fiscal year 2026. No specific full-year guidance provided due to macro uncertainties and partner visibility. However, management expressed confidence in continued healthy growth, driven by customer design pipelines, contracted royalty rates, and rising demand for custom silicon and AI. Royalty shaping. Expect strong sequential growth from Q1 into Q2, with Q2 being seasonally lower. The latter two quarters of the year are expected to see 10 to 15% sequential growth each. Significant risk factors. Macroeconomic uncertainty and tariffs. The primary stated risk factor is the potential indirect impact of tariffs and global trade tensions on end market demand. Reliance on partner performance. ARM's revenue is tied to the success and shipment volumes of their licensees. Long chip development cycles. While this offers some insulation, significant shifts in the market could still impact future demand. Key lowlights, or areas of caution: lack of full-year guidance for FY 2026. This decision signals a heightened level of uncertainty that investors will need to monitor. Sequentially lower Q2. While not a negative in absolute terms, Q2 is seasonally expected to be a lower quarter for revenue. Most important statements from CEO and CFO. CEO Rene Haas. The AI revolution is accelerating and ARM is at its heart. He emphasized ARM's critical role in powering AI across all segments from cloud to edge. CFO Jason Child. We do not consider it prudent to issue full-year guidance. This statement reflects the current challenging environment and ARM's cautious approach to forecasting amidst geopolitical and economic volatility. Conclusion: ARM has delivered exceptional results in fiscal year 2025, driven by strong demand for its advanced technologies, particularly in AI and custom silicon. While acknowledging macro uncertainties, the company remains optimistic about its future growth prospects and its foundational role in the ongoing technological transformations.